Uh, Hello, welcome everybody. There are some people online and there are some people in the room here. We're going to have a hybrid experience. So if there's a problem in the room, let me know by putting your hand up. I can see you. If there's a problem online, either drop it into the chat or raise your digital hand and I'll come to you. Today we're looking at the financial benefits of open woodland restoration, and we've called this a co-design event. What is it worth? Now, the idea with co-design is that the intent is that we're working together because more minds, can do a better job than a singular mind, and more perspectives are required in order to get a better result. So you are going to be asked to contribute. So at some point, if everyone's got their phone, you might be using a QR code to give us physical feedback into a form. Other times, you might be asked to yell out your contribution, and we'll be taking a note of that and changing things on the fly. Um, Please respect each other. So, co-design, there's no dumb ideas, but also there's no need to go, well, you're wrong, I'm right. Hear people out, let them finish their sentences, that sort of thing. The other thing is co-design only works with structure. So all of these things are timed. So I'm going to say we've got 5 minutes to do this, 3 minutes to do that. And I'm going to keep us on that structure so that we don't get stuck, bored, or miss something throughout the day. So, if I hear people going off the financial benefits of open woodland restoration into productivity, I might say, actually, we're going to be talking about that next month. Or if they're talking about environmental benefits instead of financial benefits, we'll take them through what they've been. So I just want to do some introductions. For those online, Rowan Clark, my colleague and co-founder of Regen Farmers Mutual. And for those in person, James Dyack in the back of the corner of the room has been working with myself, Andrew Ward, on open woodland restoration. So this is a project that has been backed by the New South Wales government. Both we've received a high impact partnership grant and now a low carbon landscapes grant. And the high impact partnership was what discovered this method called open woodland restoration. And the low carbon landscape is about testing, can we scale open woodland restoration across what was previously a large extent of the westfall of the Great Dividing Range? And then the third thing that we're working on is environmental markets participation. So we know open woodland restoration has social benefits, environmental benefits, productivity benefits, and financial benefits. We just don't know who cares about those benefits. So we're asking questions of you and collecting data to help us understand what channels, whether someone's come through Tablelands Farming Systems Group or from elders or from Landcare or from local media or from New South Wales Farmers Association, depending on the channel, how do they respond to different calls to action? So you might expect in an elders meeting like we've got in person, most people here are concentrated on the productivity and financial benefits rather than maybe the environmental or social benefits. From Landcare, you might find it differently. So we're also participating in that. So
Okay, Woody, just if you can just speak up, keep your voice nice and loud and slow down a bit if you like, because it's
sure.
just to make sure we can hear you. Thanks, mate.
Excellent. Thank you, Rowan. Let me know if I am speaking too mumbled or too fast or not making sense. So what we're going to do is we have already had a town hall here in Goulburn. We had about 120 attendees online and in person. And we were talking, having three farmers share their stories of open woodland restoration. We had Jeff Kay talk about the ecology, James Campbell talk about how he compared the DSEs and the grazing potential of that land compared to the grazing potential plus carbon potential of open woodland restoration. And we had Chris Comore talk about how do you get these upfront costs like fences and stuff funded. Last session, we looked at the environmental benefits, and through co-design, we went from a 6-page snapshot to an 11-page snapshot, and we released a function which can now be found on openwoodlandsrestoration.com called Map My Farm. And so far, 35 people, so in the last month, basically one a day, new submissions have come into that website of farmers in the Southern Tablelands putting in their farm, waiting half an hour to 24 hours, and being given a snapshot showing them what their biodiversity condition score is, showing them what their carbon return would be. And today we're going to look at the next thing, which is modelling the financial impact of open woodland restoration. Now I'm going to be very quick because the people in the room have already covered open woodland restoration. We have done 2 co-design sessions. But what we're talking about is instead of having too few trees or too many trees, operating in the sweet spot of 20 to 30% canopy cover. And the way that we achieve that is through direct seeding tram tracks of native eucalypts and acacias and having a big gap, 15 metres, before another set of tram tracks. And then what emerges in the first 3 years after direct seeding is an appropriate mix of acacias and eucalypts that are suited to that environment. But they are going to grow so that most of the environment is grassland, probably 70% to 80%, and 20 to 30% of it is going to be trees. Now, you will expect over time there'll be larger, more mature trees and mid-canopy trees, and that's what a healthy woodland ecosystem looks like. And we are basically replicating that natural open and clumpy format of open woodlands by that planting design. Now, before we start, we need to understand, before we get right into the thick of all the good, juicy content, we need to know who is in the room. So for those online and for those in person, pardon me, for those online, please use the link that I'll put in the chat. Is that chat there? Yeah. And for those locally, please use your camera to go onto the QR code. Good job. Sorry, it might be a second, guys. We'll go back to it. There you go. And there's the link in the chat. So I'll give us 3 minutes. It's not hard. It's now 12:38, 12:42. We'll get to you guys. Who's in the room? Cool. Thank you, everybody. I'm starting to see responses coming in. Really appreciate that. We have 2, 6, 8, 10, 12, 14 in the row, 14 in the room here in Goulburn. Thanks, Melissa. Just do another 30 seconds for those still going. I can see in the room people madly typing away on their mobile phones. Thank you. Okay. So in this session, what we're going to look at is the financial benefits of open woodland restoration. But I want to remind you, 25th of May, we're going out to Jeff Kay's place to actually look at open woodland restoration from 2015 and open woodland restoration from 2024, so that you can see it at a quite mature stage with your own eyes. You can ask the farmer directly questions you might have around environmental productivity or financial trade-offs. And the thing that we're doing 3 days after that online in a session not too dissimilar to this is co-designing how do we communicate our story collectively. More pools of capital open up if we're doing this as a group than if we're doing this individually. So let's go and talk about some of those pools of capital. This is basic stuff. We can go into detail with questions, but I just want to equip us with some common language. So we anticipate essentially four pools of capital. They are environmental markets. So there's carbon markets, biodiversity markets, water markets. There's supply chains. Now that has been really well expressed here in the room by OWR and Ruminati, talking about the pressure to understand carbon emissions intensity within the food and fibre industry. Then there's the public good, philanthropic and government pools of capital, and then the local economy. So you'll probably be aware of renewable energy, be those wind towers, solar farms, or transmission lines for them. They're impacting on multiple land use on farmers' land, and they represent a new opportunity for catalysing environmental opportunities. And new businesses, particularly of interest in this space, might be shared fertiliser, biodiesel, nutrient, biochar, where farmers can be both feedstock suppliers and buyers of those shared resources. But as an individual farmer, it's much harder for you to start your own biodiesel plant. So what are the things that you can access as an individual? In terms of environmental markets, we've got farmers like Dr. Jeff Kay, and I could play you this video, but I'll let you watch it at your own rate. And he's talking about, what is it that I got me into woodland restoration, why he as an ecologist and a farmer was considering it. And that's great for Jeff. Oops, we're going to try and play that. But beyond Jeff, what he's really selling at the end of the day is a carbon credit. Now, if you look at the volume here in that light blue section, that's coming from safeguard businesses. Now, these are the businesses that are being compelled to offset the emissions that they produce through burning generally coal, oil, gas, or heavy industry manufacturing like aluminium smelting or cement manufacturing or fertilizer groups. Those safeguard mechanism businesses, their business is producing emissions and they've got to reduce their absolute emissions, which means they need to participate in offset markets. So as farmers, we have photosynthesis. We take the input of photosynthesis, we take carbon dioxide and we turn it into habitat, healthy soils, food and fibre, trees, right? We turn it through green leaves into useful stuff. And those combustion intensive safeguard mechanism businesses, they need farmers and green leafy removal of carbon dioxide out of the atmosphere into useful stuff. If you look at this maroon section here, and this is stepping out from 2025 to 2030 to 2035 and beyond, you see this massive section of carbon that they expect to remove. That comes from planting trees on land, reforestation. Farmers own the majority of the land where this can be planted. So there's going to be a massive amount of demand and a limited amount of supply. Now, in addition to the carbon markets, nature repair and nature positivity is something that the government is starting to pursue. And it's using some of the frameworks that it got from the carbon market. So the nature repair market is regulated by the Clean Energy Regulator, same guys that manage the carbon market. Now, what you do if you're doing a nature repair project is you've got to do planning, you've got to deliver some activities, and you've got to report on them. But if you do, you can have a biodiversity certificate that a large organisation which has environmental impacts might use in the same way as those big emitters use carbon offsets from farmers growing trees. Those people that make impacts negatively on the environment, developers, road developers, transmission lines, renewable energy towers like wind towers and solar cells, those guys are in the business of, unfortunately, disturbing the environment, and they need to make good for that disturbance. And so what you're seeing is the nature repair market coupled with the carbon market to produce stacked outcomes where you're looking at the carbon that has been sequestered out of the atmosphere turned into trees, but you're also looking at the habitat, that boxgum grassy woodlands that has been created, and how it becomes a home for koalas, gliders, birds, a whole bunch of native grasslands. And those safeguard mechanism buyers, their demand every year, because they can't get rid of emissions, they have to offset them. It's growing year on year. And even if you plant a tree today, it's going to take it 5 to 7 years to become a forest. So there's a Chinese proverb about when's the best time to plant a tree? And it was yesterday, right? And the same thing goes here. I just want to make sure that you guys understand that farmers individually and collectively, we are the only ones that have the environment. If you live in the urban area and you're anxious and you're casting your vote and casting your dollar vote, uh, your ability to sequester carbon is pretty minimal in the city. You don't have photosynthesis. Your ability to look after endangered species and provide habitats for birds and mammals and reptiles, it's limited. If people are serious about addressing the environment and climate problems, we have to engage farmers, and groups of farmers can have a material impact that individual farmers can't. What does that mean? It means like you've got to be looking as an individual for how do I have my carbon project and my biodiversity project? How does that help these native species that might be on my area? How does that plug into my sustainability reporting for my supply chain? How does that plug into landscape rehydration opportunities that affect the community downstream? And you know that if you're dealing with, say, a creek or bush restoration, clearly these things are material and at scale. If you're going to provide a habitat, you need to connect and coordinate the activities that happen across multiple farms. And then you get an impact which enables the restoration of koala populations or quoll populations or bird populations. What an individual does is often subscale. So once you're working collectively at scale with coordination, you get landscape scale investment theses that open up to pools of capital that an individual on their own can't get. And so how do these pools of capital interact? They often interact together. So you might, for example, be looking at the public good outcome. So I mentioned before at the start of this that open woodland restoration has come about thanks to New South Wales government grant funding. And it's going through this systemisation process thanks to nature, Natural Resource Management Australia, NRM Australia, and again, the New South Wales government. So as farmers in the Southern Tablelands, what they started off with in 2004 was the ability to do a landscape impact program, identify their land management units, work out what interventions made sense, and then we've continued to be able to support that through public good income. And that is opening up opportunities. I don't want to, I love Vince, but I don't want to hear from Vince right now. There are other public good things, philanthropic. So people are mad into koalas or black cockatoos or single and enigmatic species that they want to see saved or restored or prepared. There's philanthropic, there's family offices, there's bequests, there's community wealth building that ties into that. Supply chains, so we've seen this in sugar, we see this in beef, where there are things like Greenhams and Tarosi. They're looking at like uh, what do they have? Three levels of producers, right? Now, just being aware and engaged might put you on a tier three and might not give you a market access or a market premium. Reporting against things, not just engaging, might get you to tier two, which might mean a 2.5% increase on the cost on the price you're paid for your beef. And if you're doing exceptionally well, you could get into tier three, and that could open up further premiums for you. And we've heard today from Ted. I loved our TED talk. Thank you, Ted. About the 33 wool growers here that are participating in a European-based supply chain agreement. Again, it's very hard for these large organizations to deal with you as an individual, but if they can deal with you as a supply shed in a landscape, creating gliderways, creating north-south corridors, having a whole narrative that they can invest in, that makes a lot more sense than investing one-on-one with each farmer. Local economy and food systems. So we're starting to see this with groups in land care. For example, we just finished a work with the group Kiwa Wodonga, and out of the four things that they prioritized, they had like a 25-year, $25 million riverkeeper project. But the other things they had were all local economy that they could put into action themselves. So one is to create a biochar facility. So they've got Northeast Water, who needs biochar to filter water in order to make sure that the water is fit for human consumption. So there's also weeds growing in this water, and so they harvest the weeds, and that becomes feedstock for the biochar. And then Northeast Water buys the biochar to filter for the water. We're seeing similar, like pine forest debris get turned into biochar, get turned into fertilizer on these high rainfall areas. That's good for grazing cattle, be they for dairy or for beef. And then you're seeing this group of farmers get together and they're doing beef over dairy. So the male potty calves in the dairy industry have historically been an animal welfare bit of a problem, but you're putting them into beef production facilities, and they're basically doing a revenue share on that male calf. And this is enabling them as a group to take control of their economic destiny, reduce their input costs, add resilience, and create even more of a narrative. So, you know, in the Southern Tablelands where we are with the box gum, we're fortunate to have gone through the process with the Southern Tablelands in 2024 to describe a landscape action plan and to look at those four pools of capital. And we were last month able to look at a farm snapshot with co-design. We created what is in a farm snapshot. And I'm just going to go through. You can see here that it helps farmers understand what of their land is eligible, what of their carbon return. So that's high is yellow, green, where this is sort of mid to high. But if you're purple, you're not generating as much. In terms of biodiversity, we also looked at how do we present our biodiversity condition score so you understand your farm, but also your farm relative to your environment. And after people have been able to uh, understand what they have, the question that naturally comes is, what is that worth? And that's the question that we're going to address today. So, what we're going to do, if you're online, please go to openwoodlandrestoration.com and we're going to go to financial impacts. Now, for you guys in person, I'm going to bring that up online so we can see this
Hey, Wardy,
together.
got a question for you.
Yeah, mate, I might just take us off for a second.
So there was a couple of questions in the chat on the way through.
Yep.
How are you planning to have questions kind of so like things like once trees get to a certain age, what's the impact on the carbon and the biodiversity with respect to that? And I'll drop the link in a sec, Pip. And what does the carbon method for trees carbon limit the project at all in your experience, e.g. Species planted, lock-up establishment? So they're two pretty big questions. Is there time to address those now, or would you like to come back to them at the end? Or
Well, let's start them now. I think we're only half an hour through. We've got another hour and we're already at the financial calculator. So let's take some time. For the people in the room, they didn't hear that question. So I'm going to get you to repeat, I'll repeat it. The question is, my understanding is that once trees get to a certain age, 15 years, they max out their carbon produced plus many other benefits. How is this being accounted for? So for everybody in Australia who does a registered carbon project, there is a model that the Australian government uses over every hectare called FullCAM. It stands for Full Carbon Abatement Model. And it tries to work out the amount of carbon that has been abated by leaves, by twigs, by branches, by the certain environment. And then it says if you can get a forest, which is trees, to 2 meters tall and 20% canopy cover, FullCAM will prescribe the amount of carbon that that area will produce over the next 100 years. And then you discount it by 25% to get to a 25-year project. So it's one of those things where the age of a tree, the types of trees, the questions about actual carbon abatement in your particular area don't matter as much as what the FullCAM model says is your carbon abatement, because that's how many ACCUs you are going to be delivered. So it might be a mystery to you and me as to how they calculate FullCAM, and we have to take it on faith that some scientists that are better than us came up with that. But one of the things you don't know is what the price of an ACCU or a ton of carbon will be. But one of the things you do know is how many tons of carbon you're going to get if you can get trees to 2 meters tall and 20% canopy cover. And does that answer your question? Give me a thumbs up or come off mute.
Yeah, thanks, Wardy. I think, I think the concern is that once they get to that, that maximum, you still need to provide additional evidence that that's still the case. So from a CER perspective, you may have to provide other evidence that that actual forest or that area is actually producing what it says it is, over and above FullCAM.
Yeah, I think one of the benefits of the Environmental Plantings 2024 method is that if you're under 200 hectares of carbon project, they can actually see the trees that you've planted from space, and you're no longer required to do an audit. If you do more than 200 hectares, then you actually need 3 audits throughout the 25-year lifespan. But most farmers sitting here, we're going to be more than 20 hectares, but less than 200 hectares. And we're going to need no audits The good thing about trees as a sequestration product is you can bloody see the tree, right? Like it's embodied carbon. And you can not only see it with your eyes, you can see it from space. So I think there is no audit requirement for most of the open woodland restoration projects, Anne. But yes, particularly if you're going to try and get biodiversity benefits on top of carbon, you will need to report that you've still got 2 metre tall, 20% coverage, and you'll be wanting to show evidence of the animals that are calling that open woodland restoration area home. Any other questions before we move on?
Thanks,
Vicky,
Bordy. That was good.
is there a question there, Vicky? How's that calculated?
No, I only when I mentioned that I was at the Carbon Farmers Conference up in Brisbane a couple of years ago, and the federal representatives were saying that at one point sequestration down to 30 centimeters, so therefore X across your hectares, and they were taking that down to a meter, and I believe that they're working on taking that further. So you're getting, in the case of 30 centimeters at X amount, you're going to get 3 times that. If it's down to a metre, down to 1.2, it would be 4 times per hectare. That was part of the calculation as I understood it.
Yeah, Vicky, we might be talking cross purposes there.
Yeah,
So
I can
when you're
see Anne's
talking about
message there.
soil
Yeah.
carbon measurements versus growing
But it's all
trees.
part of the same conversation, surely, in the end.
Yeah, well, basically the soil can absorb carbon dioxide out of the atmosphere and turn it into
By
fertility,
lunch.
or
By
trees
planting
can
something.
take carbon
Yes.
I'll see
dioxide
you
out of
when
the
you get back.
atmosphere and turn it into habitat and wood and things. But technically, what you're doing is engaging with a specific method when you're entering into the carbon market. So one method is soil, and a separate method is tree planting, in this case, environmental plantings. Any other questions? Otherwise, we're going to dive into our calculator. Rowan, anything that you've come across?
Well, Anne just had this other question of, does the carbon method for trees carbon limit the project at all from your experience, i.e. with respect to what species you can plant, locking up at establishment compliance? Now, some of that will come out when we go through the model, but can you talk to that?
Yeah, sure. So if you're planting trees under the environmental plantings method, they have to be suitable trees to this environment. So you can't go putting in fruit trees. You can't go putting in non-native trees and growing them to 2 meters tall and 20% because they will not qualify you for carbon credits. But if they're typical to this environment, red gum, yellow gum, white gum, grey box, black box, Blakely eyes, they're going to be suitable for establishment in this area, and they're going to be native eucalypts and acacias, and they will classify as carbon. In terms of obligations, when you commit to doing a carbon project, you're committing to growing trees and keeping them there for 100 years, even if your project only goes for 25 years. And the expectation is that those trees, once they get to 2 meters tall and 20%, they withstand fire and they regrow. In fact, when we talked about full cam before and how much carbon you get, they've worked that out on the basis that certain parts of Australia are going to burn up to 7 times in a 100-year area. But if you plant those trees, you'll still get the carbon, even if it ends up you have a fire event in there at some point. Yeah.
They've all been really, I think, important questions from the group, but the other thing maybe just to point out is through a feasibility report that you can access it, all of those things are actually answered in that report as well. So you can get the information you need before you make any commitments and things like that. Yeah.
Perfect. All right, so we're going to go to the website for open woodland restoration. So we've already talked to you guys about who we are, and you can see who our partners are in this project, what we're looking to re-establish. If you've not done this yet, but you would be interested in knowing what you have on your farm, then the most simple and quick way is to come and get your own, put your name, your email, your address. Very quickly, you type that in, that locates you on a map, and we will send you back that 11-page report called your farm snapshot. one of the things that you get from your farm snapshot is a gross number of ACCUs that comes from your report. So we look up here, we've got 10,000 ACCUs on a 30-hectare plot. And you can see on the left, if I move one of these, it changes the outputs on the right. So in this case, we're starting off with a base price of $35, $36. This is what you could sell a ton of carbon for in the Australian market today. But if you're of the view that over the next 25 years, those safeguard mechanism buyers who are compelled to buy aren't going to find other magic sources of photosynthesis to take carbon out of the atmosphere, and we aren't prepared to grow trees at $35 yet per tonne, then that price is going to have to move. And as that price moves, it changes the financial return on the right. Now, the other thing is, if you're imagining a base price of, say, $50 over the 25 years, you still probably want to put in an escalation rate. And maybe that is at 2.5%, which is sort of inflation rate, CPI rate. And you might want to do a discount rate, particularly if you're doing a net present value of $1 I could spend today on a 25-year carbon project, or $1 I could spend today on buying a urea or a nitrogen input. How do I compare that dollar for dollar? You'll need a discount rate for your net present value. Now, the other thing you might want to be looking at is your project setup costs. So a lot of farmers will have to engage experts to do the GIS mapping to help them understand the precise location of their project area and be compliant. And they need two other documents. They need a reforestation management plan and a permanence plan. Now, these are some things that farmers are generally likely to outsource to suitably qualified personnel. And between now and June 30, you can come to Elders or you can come to us, and you can actually get financial assistance to help you work out the feasibility of doing a reforestation management plan, a permanence plan, and getting your CEAs mapped. But you'll have some setup advice costs, and that massively interrupts or interferes with the upfront costs. Then you'll have some prep costs. Now, in most cases, you've got two ways of putting trees into the ground. One is as a seed, and then what emerges is suitable for that microclimate. The other is as tube stock. We've already grown it from seed, and you might get it to 4, 6, 8, 12 inches. And the taller the tree is, the more expensive it is, right? The cheapest is to go across, suppress the weeds, and then do a direct seeding. The most expensive is to prep the land and then use mature seed stocks. And obviously you want to be ordering the right number and amount of trees to get you that diversity and survival rate that you hope. Then you've got annual maintenance costs. Now, it might cost you $500 a year to have somebody walk around the project over the next 25 years and take photos to show that in your permanence plan, you make assertions about what you're going to do for fire control, so that if a fire comes through, you've taken every reasonable effort by having a fire plan, by maintaining fire breaks, etc. And so annual maintenance might include proof and evidencing that sort of stuff. Then there's compliance that comes with every time you want to take carbon that has been sequestered into those trees and sell the ACCUs to generate income, you need to do an offset report. Now, again, you're probably going to need to know what the costs of those are today to know whether it's worthwhile to put your project in. So you can model your costs, and it comes out on the right-hand side in your charts. Likewise, costs are going to inflate over time. So if it's $500 today to have an annual report created, in 10 years' time, you have to escalate that by 2.5% a year because the same bit of labour is probably going to charge more, right? Replanting risk. One of the key things is in direct seeding or in tube stock, you have to assume a certain number of that planting isn't going to survive. Now, you could be wildly successful and you will get 100% straight. Or you could, and this has happened to some of the best farmers, year on year, sometimes in the most fertile ground, you'll plant trees and they just bloody don't take. Either pest pressure, too wet, too dry, not strong enough saplings, seedlings, the establishment wasn't there. And so you have to ask yourself, well, how much replanting do I think I'm going to do? And is that replanting going to happen in year 1, year 2, year 3, year 4? Each of those sorts of decisions impacts everything. Now, the other thing is that these open woodland restoration areas need to be fenced off and need upfront capital generally. And a lot of farmers are borrowing that upfront capital. So there's a cost associated with the cost of the upfront component that you ideally want to pay back using the income that's come from the ACCUs that you've generated. Okay, I'm just going to check online. Has everybody had a chance to play with the calculator? Pip Job, I'm going to ask you, did you get a chance to play with them?
Yes, I am playing away and I've also requested a report. Thank you, Wardy.
Ah, great. So one of the things I'm going to ask from us all collectively is what are we missing, right? Like and then I'm going to do a better question. What can we cut? But before we go to what can we cut, like, is there a question you've got about the financial return of open woodland restoration that's not answered through that financial model? We've tried to account for establishment, for annual maintenance, for the offset reports, for the pre-work you'll do in design, for the planting work, for the costs of funds to do the work. But have we missed anything?
Got estimates in there for all of those things based on regions, the whole lot, or is it you just sliding it across to try and determine what that cost is?
Yeah, so there's definitions below about what each is, but we haven't put in estimates for this region. But is that something that would be useful?
To me, you sort of get away from people trying to estimate it to get, well, here's an example. Your fencing costs, you need this, for instance, or, preparation costs, this is roughly how much per acre, hectare, whatever, just to try and take the guessing out of it more.
Yep.
And then you can refine it. So it's almost like, here's your model for this region, we've done our best, but then do your slide.
Perfect. Did you hear that, Rowan? And have you got that as a note?
If you scroll down, let's just have a look at the assumption. So the cost, for example, scroll down. So you've got understanding the charts, understanding the assumptions, right?
Yep.
I just want to explore this idea. So keep going.
I can't. Oh, there we go.
Okay, so you've got project setup costs, for example. Now, we have benchmarked them to our generic experience, but I think the point that was being made, for example, the annual maintenance costs are benchmarked to, well, it's actually benchmarked to an experience in the Southern Tablelands, but the prep seeding and planting off there on the left, the model assumes, 85% direct seeded, 15% direct planting, and then we've got some assumptions around cost there that are benchmarked. I think just get confirming, the point was it would be good to have like a table of, if you're in this region, here are some indicative prices for those components.
Yeah, I think that.
Yeah, so let's just say you put in Southern Tablelands, for instance, and it would automatically set all of your slides to what the best estimate would be.
Yep.
And then, yes, you can read these to go, oh, okay, I think I'm going to do this a bit more.
I think that's great. Anybody else got things online or in the real world that you'd want to see? Thanks, Phil. Yeah, Will?
I know it's hard to model, mate, but like the production gains.
The production gains. So you're already ahead of the class. Next month, when we look at model your grazing impacts, we're going to look at, well, now you've got trees in that. Is your DSC in 5 to 7 years going to be half of what it was before you put trees in? Or is it going to be twice what it was now that you've got trees in it? And so we will totally look at productivity improvements or impairments as a result of woodlands restoration, but next month. So come along.
Not square the costs up front, you know, that you're getting a better land style grade or whatever.
Yeah.
Well, the other thing too, sorry, I was just going to say on capital costs, you know, like previously that we had Ted talking about, you know, investors, you know, it'd be great to go. How do you get investors in there for that capital cost up front? So instead of having to go to the bank, hey, we've got some people here that are interested in this. I mean, I know that it's, you know, if you do it as a sort of call it a co-op or a group, it's probably easy to do that.
Yep.
But I just think that that's another option.
So fit for purpose financing options, not just the assumptions and the charts.
At some point, right?
Yeah.
So it's all part of, okay, how am I going to do that? Who's it going to go to? So if you sort of got a model that says, well, hey, here are some interested parties. They're actually interested in putting, you know, cash into this to help you get to there, which then just, it makes it easier for you because you've got expertise, you've got people that want it to then just go, here's my place. Photosynthesize away.
Yeah. That's brilliant. And you've got fencing in there. Thank you. Green loans, totally worth checking out. The ability to compare it to the current return. So the financial model with carbon in it versus a business as usual model so that you can make the comparison. What if I did nothing? A legitimate option. What if I did this? And what's my financial return comparison for that?
So Woody, along that line,
Yeah.
and kind of thinking back to what we've just said, obviously you need to spell that area of grazing for a period of time to get that inspection site. So in one sense, you could look at that very simply from a farming perspective as a cost. So operational cost. What am I losing from that productivity for that 5 years? And so even though I think the right place for it to fit in is in that productivity calculator, on the economic dashboard, it might be good to kind of go, well, that 5 hectares, I would make $15,000 a year on each year for 5 years. So can I just put in $45,000 as an overhead that I'm losing potentially?
I'm going to write that into the chat.
Hey, Woody, can you just summarise that?
Yeah. So Rowan, in the room, we just had applying the opportunity cost of the foregone grazing for the period that those trees are establishing. It's currently in the productivity tab, but the question from the comment from the floor was it'd be good to see that in the financial tab.
We took it out of the financial tab because it's not, it's the just to go through this logic, right? So we had the opportunity cost built into the financial model, and but when you do that, you end up kind of double counting the cost. So what we did, in order to do a comparison, the clean comparison is status quo versus what happens if I have a carbon project. So it's not an opportunity cost. There is an opportunity cost, and that's if I do a project, I lose the grazing, and then I have income from both. You know, after the establishment, to have the opportunity cost embedded in when you're actually analysing the project on a standalone basis, that's where it doesn't make sense, because what you want to understand is how does the project itself look as a standalone proposition, and then you want to understand it with respect to your business. So that's why we've separated those two out.
Yep. In a dashboard, can you compare ROI of direct seeding to tube stock versus survivability rates?
No, not currently. So yeah, it was a good question as to is that something what people want. It's kind of like how many sliders do you want on the page? And so we went, right, we're running out of slider room. We'll just assume 85%. But that, if you think that's worthwhile, we can definitely include that.
Excellent. All right, I've got another co-design question for the people
Hang on,
online and
Simon just put something into the chat. Did you want to just check that?
I think Simon's saying the average cost assumptions are useful, but ideally also linked to more information where there is potentially a large range of values to help them with estimates. If a site has little weed impact, that should lead to low weed maintenance. But the site is heavily infested, blackberry, tussock, you might require annual control to get those trees out of the ground, or 2 preparatory controls or 3 preparatory controls if you're trying to get the trees out of an improved pasture like Jeff Kay had to do. My next question for you all was going to be, and I'll bring up the site again, adding more is probably easy for us to do, but if you're looking at the financial model and you want to do it at a glance, do it quicker, I worry that we need something like, what are the 3 key figures you want as a farmer or a decision maker about open woodland restoration? What are the 3 key figures for you? Is it dollar return per hectare, or is it cost up front, or is it the return on an ACCU? Like, what are your 3 measures? So from the room, whilst if those people online, if you can put your 3 key metrics into the chat, that would be very helpful. I'm going to go around the room and I'm going to ask people in person, what are the 3 key metrics that you'd want to see in order to get confidence? Can I start with you?
Yeah, long-term viability.
Long-term viability. Second one?
Long-term viability.
Long-term viability. I'm going to guess the third. Long-term viability. Okay, Camilla, can I go to you if that's all right?
Yeah, upfront costs.
Upfront costs?
Yeah. Investment.
Initial investment?
And then how long until you get a return?
The break even or the return starts to come? Break even? Yeah.
Yeah.
So how much upfront? How long does it take to break even? And is it that comparison one between business as usual versus doing this project? Yeah. Okay. I've forgotten your name, but I know you're a shearer. But please, from your clients, when you're out shearing for multiple farmers, what do you think they feel are the 3 KPIs that matter most to them?
Definitely that input cost,
Input cost?
and what the return on investment would be.
What's my ROI?
What are they getting in?
Yeah. Gentlemen at the front row.
Same things, return on investment and input costs, how long it's going to take to break even.
Yeah. Has anybody got one that's not already been called out that you're like, interest rate, inflation rate, AccuPro?
Yeah, I think it's
It's where we are now, what we know to use words, but it's those sort of, where could this get to?
Yeah.
Or could it go the other way? Because you've got all those costs, but you might go, geez, what happens if they do find another system, or they. There is one thing.
Yep.
Agriculture is the paradigm to most of us. We think we're putting our assets back or produce a kilo of egg or a kilo of grain. It doesn't have to be that way to make money from agriculture. There's opportunities that are opening up to us with carbon fitness, all of those. There's quite a few of them actually. So isn't it our responsibility as land managers to look at them, possibly dabble in them, for the future of them?
So is that a diverse income diversification discussion?
It's an opportunity to diverse from a protein-based agriculture system to possibly an environmentally based, carbon-based, whatever. We have to look at it. We're negligent, you know.
On that point, and it might come more into productivity next year, like the nutrient density, I reckon, of beef produced in an open woodland where the grasses and the trees have been cycling nutrients at different levels in the soil profile so that animals themselves are getting nutrition from different varieties of grass and plant species. I reckon we don't ever measure the nutrition of that food. It's just lamb, right? Or beef going out the door.
The fundamentally important thing from any of this is it can be a win-win for Asia.
Yep.
Because we can actually get paid to improve our soil, to improve our agricultural production. So that's what brings me to this one.
For those online, what came out of the room then is what's interesting about this is it can be a win-win because you get paid to be doing good by the environment and growing protein. Was that what you said? Yeah. Okay.
So if I'm looking at what point would it be worth for my property? So how many hectares, how many trees would I have to put in the ground to sort of offset those registration costs?
So one of the comments from the floor here was about scale. How big does my project need to be before it's covered its costs of registration and establishment? So a minimum viable size, I guess. Okay, Richard, as an offset. So there's some more questions from you guys. Gross margin to compare against existing enterprises. Richard, do you want to have a go at explaining what your question or comment is there?
Hi, Andrew. Yeah, what it was is if one's coming in and running what one does, and then you have an offset and you do an open grass restoration. There's a lockup period for that time, so I know that I may make $1 a hectare on cattle or whatever figure. So, what is that benefit from the project or being involved in lieu of me offsetting or not having that $1 a hectare for a period of time until one can then incorporate that into one's existing management practice?
Fair enough, fair enough. And it might actually be interesting to have the capital or the valuation discussion. In the room for you guys, I want to understand if in the first 5 years you're not grazing that particular project area, a valuer might be tempted to say you're ruining the value of that property, right? But after 6 or 7 years, when the animals are back grazing, you've definitely maintained the value from what it was before. Possibly you've improved it because now you've got trees and habitat and less erosion and salinity, and you've got shade and shelter. So, and you've got a second income coming from carbon. So the valuation of that land for 5 years goes to the floor, and then afterwards it goes potentially much higher, steady state, or lower, depending on how you work with your valuers. So a question to the floor is, what information do you need to have confidence or to provide confidence to your valuers, your banks, the decision makers in your family that aren't you, that this is a good thing for your farm? What are the inputs that you'd like to say this is a positive value, or what are the inputs that you need so that you can, manage expectations from people that, land will fluctuate in value in year 5 compared to year 10?
I was worrying about 5-year valuation, why would I bother doing it?
Yep, if I'm worried about 5-year valuation.
Unless you've got a bill to value it for, generally it's, if it's selling or it's what are we doing it for, really?
Yeah, I think it does come into financing those upfront costs and whether your bank is the facility that you want to finance those costs and whether they see it as.
Yeah, people out.
Yeah.
It's got to be part of the whole equation, right? So sort of, it's one of those things, is it based on pulling out, yeah, I can't run as much livestock or whatever it is, that is my cost, but here it is going to be over here. That's an easier discussion versus, oh, yes, my land values drop because I don't have as much income potentially that 5 years.
Excellent.
Might need to repeat that, Wardy. We can't hear you, mate.
Much on the money. If somebody else is picking up the tab for us to get a productivity increase, we'll back it every inch of the way. But the strange thing is fundamentally, we're all farmers or graziers at heart. And we're probably not that interested in the bloody trade more so than that extra kilo of beef or sheep or whatever we can produce them.
So I'm going to try and summarize the offline conversation for you, the benefit of you guys online. There was a discussion about valuation, and if you need to revalue in the next 5 years, you know, that will be a different discussion with your bank to if you're looking at the value over the next 25 years with your bank or with your lender. And then further to that discussion was the idea around identity. We're less interested in what the bank values it at compared to the productivity. We're interested in, are we going to get another kilo per sheep of wool clip or beef growth in a growing season because of trees in the landscape? And that's the value that most of us ascribe to any practice change, is does it end up in higher productivity for me?
Think about it from, let's just say you were going to sell your property. You were investing into this.
Yep.
You know, how do you actually upsell that to the potential buyer?
How do you sell a project that's part way through?
So it's not just you would, you know, it's going, okay, I would do this for these reasons, but it also is a good sell point.
Yep. So that the argument there is that carbon projects become a unique differentiator when you're going to sell your farm, you know, especially if you've gone to the costs and they've got the upside. Okay, thank you.
So it was, Anne had made the point about insurance, that the cost of insurance and the need for insurance with respect to protecting your investment as a future income stream should be considered, which also points to the fact that one of the things that we haven't spoken about on the financing page is how do you kind of get your head around the risks to these future income streams. So like, how do you get your head around, well, what's my risk for replanting? What's my risk for fire kind of impact on my carbon credits?
Do you want to talk to that, Rowan?
Not any more than I just did, but like that. But there is a question, like as in how in this page it feels like it fits in the financing page. We're talking about the returns. When you talk about returns, you also need to understand the risks with respect to those returns, right? And so insurance is kind of caught up in that. That's one way to kind of price it. But yeah, it's clearly on this page. We probably need to talk somewhere about, all right, here's the key risks that you might need to consider. For example, fire, replanting risk.
Does that get everybody here in the room? So on this financing page, having a risks table, fire, feral animal, replanting failure for any reason, and attributing what are the sort of risk metrics in the southern tablelands, what's likely to happen here. Like you will catch on fire in the next 100 years, right? So that it's just how many times will you do it? And will there be an open area, so it's just a grass fire, or will it have trees and shrubs and grass involved? Or will it be a national park and come roaring through it, 5,000 degrees? Okay, I'm going to take us back because of timing to our design process, co-design process. So now we're going to talk about the gap. So there is funding gap where you have to pay for the land prep, the seeding, and maybe building fences to keep feral animals out. And so there's a loss in the first few years before there's trees that are starting to gain. And so how do you fund that gap? Now, one of the answers is self-funded. The other answer could be bank funding. A third answer could be the government is the one that wants all these carbon emissions and carbon sequestration goals met. So maybe the government should be like when they help students go through university today by giving them a HECS debt that the student pays off when they earn a certain amount of money. Maybe that's the sort of style of funding that farmers need in order for them to get over these upfront costs. Maybe they should be working with carbon brokers who will wear the risks of the capital up front, but take some premium and reward from the ACCUs. Or maybe, as Ben was suggesting before, we need to know who the end buyers are, and there's an offtake where they're paying for the upfront costs so that they can get access to the carbon at the end. Because one thing we know is that planting these trees is going to be absolutely important. So we're nearly at that point, particularly of the structure. For those online and for those in person, if you can click this QR code, and I'm going to put the same link into the chat. What we would love for you to do is please give us some hard empirical data. Biodiversity and carbon. And what we're after in this is simply have you done a snapshot or not? What are the benefits that matter to you? What are the pools of capital that interest you the most? What did you take away from this session? And, you know, have you learned more about the financial benefits now than before? So I'll give you guys 5 minutes. And then what we're going to do is open it up for Q&A in the online and real world.
Put that QR thing back up.
Yes, give me a sec. Bear with me. This one. Great to get some responses here. Got 10 responses so far. And of the 10 people, when we're talking about what is it worth, 3 had got a snapshot, right? So they understood what they had, and 7, well now 8, hadn't got a snapshot. So like, I guess my question is, are we putting the horse and cart the wrong way around? Are we talking, are we taking too long to get somebody a snapshot, but we're instantaneous with the financial calculator? Is that a problem for anyone?
My interpretation is how I completed this snapshot.
Mm-hmm.
Is that right?
Yeah. So that's that other page on our website.
Yeah.
So
it's probably not.
yeah. No, and certainly 3 out of 13 had a snapshot and the other 13 didn't. Okay. Thank you everyone for filling that in. Who needs more time? Okay. So what we're going to do with the remainder of our time together is enable people to have a view of what's coming up, and bear with me. So we have the opportunity to work with farmers in the Southern Tablelands to help them do snapshots for free. Just simply go to Open Woodland Restoration, map my farm, and in 24 hours, we'll send you back what your farm level feasibility looks like. In that, it'll include your biodiversity condition score, the carbon sequestration heat map, the carbon eligible and ineligible areas, and it'll tell you how you can do open woodland restoration. We also will take the feedback from the 2 surveys we did today, from the calling out, and you will see us, we're quite rapid with our iterations. So we'll probably send you all an email before the end of next week saying this is what it was like and this is what it's like now, just to show you that your input doesn't get wasted. It actually gets incorporated into the website, the Open Woodland Restoration. And then the other thing is,
just on that,
if
Woody,
we can
sorry.
get, and it's a goal, I guess, 100 or so Southern Tablelands farmers to have identified what they have using the Map My Farm, then we can actually collectively start to go, well, what pools of capital can now respond to 100 farmers, and what does that look like compared to one farmer at a time? One farmer at a time is going to find it difficult to access bespoke funding for that gap, but 100 farmers that are all interested in open woodland restoration, that have a fair understanding of what their opportunity is, that becomes 100 farmers looks like a financing opportunity that a bank can get their teeth into, right? And so we want to understand how to get as many people in the next 30 days. So we've got on the 25th of May, the Waminda field trip, and the 28th of May, a discussion about the productivity benefits and how do we tell our story. But the idea would be we're currently at 35 out of 100 Map My Farms. If in the next 30 days we can bring that to 100 farms, we will have unlocks for this region, new forms of funding the capital gap, new forms of opportunity for the biodiversity and what that would mean. So that's what's coming up. We've now got probably 10 minutes before we were going to call it at 2 o'clock. And so I would invite anybody with any questions about open woodland restoration, whether they're about the financial or the environmental benefits, the productivity benefits. It's an open forum for the next 10 minutes. Any questions?
Libby made the point, sorry, and Anne's just raised her hand. Libby made the point before that before I do a snapshot, I want to know what the data is being used for and shared, which talks to partly the previous session where we've on the website, it describes how the data is collected and the privacy around arrangements around that. But Woody, do you want to just explain? So, yep.
Sure. Libby, so we don't even ask for the mobile phone number of the people. We're literally after your email address and you define where it is and we'll send you a snapshot. So you haven't had to log in to anything, become a member of anything. You have the opportunity though to say, I want to share my snapshot with the group that I belong to. So your group might be a land care group or the Tablelands Farming Systems group or the local elders store here. There, so when you do your map your farm, I might just give an example. Who's in this local area? Can I request one for you? Can you see on here?
What do you need to know?
Just your address. Phil?
Oh.
Oh, my Phil's coming up.
James, that's your property name or the street name?
Property name.
What about street?
942 Cayon Road, yeah.
942 Cuddy. Yep. And James, what's your last name?
WHEGH2.
And what's your email, James? Okay. So on screen, James, you can probably see that this is filled in some cadastrals. You one or are you other cadastrals? Or is it just that area as your farm?
More or less, yep.
Yep. And then you have an opportunity here to say, do you belong to New South Wales Farmers, Tablelands Farming Systems, either any of these land care groups, Southeast LLS?
We do work with LLS, Fullerton Land Care, your Tablelands Farming too,
Yep. And would you like to share your farm boundary with those groups? Yes or no? Yes?
I don't know.
Yep. And would you consider yourself an innovator, early adopter, early majority, late majority, or laggard?
Oh, fast.
I'll put late majority or laggard. Yeah. And then by simply submitting, we will be able to produce what areas you're eligible for, what the carbon sequestration and what the biodiversity condition score of that parcel of land is.
Yes, and it's only taken.
Paddy, are there more? These ones?
That square one in the corner, that little square one you just
Yep.
got. And between the vertical one and out to the road.
This way or this way?
Sorry. Up to here,
That one?
yeah, down to there. So yours included in this L or not? Not that one.
Not that one?
Oops.
That one?
Yeah, that one. And keep going back around. All those down there, this one, down to that corner.
Yep.
And fill all that in.
Yep.
And if you scroll that way, that's all in it. That one needs to be blue. If you scroll the other way, actually.
Yep.
And these two there, there'll be two.
These two narrow ones.
That's good one.
We'll just let them come and load in.
Well, James.
Well done, James. While that's happening, Anne, you've got your hand up. Come off Zoom and ask your question.
Yes, Wardy. In 2021-22 in the Riverina, the federal government did a biodiversity plus carbon method pilot program. I think that I believe that ran over 2 years, maybe 3. Do you know what happened to that? Because that was an ideal opportunity or approach that generated upfront funds to help support the costs associated with setting up a tree vegetation project.
It was a very good program. For those that don't know about this, this was the New South Wales Biodiversity Conservation Trust in the Riverina. It basically took away the upfront costs for starting a carbon project by paying for the fencing and the tube stocks and stuff. But the condition was that in 25 years' time, when the carbon income had finished, you'd actually be putting this new part of box gum woodland that you created under a biodiversity stewardship agreement. So that would continue to pay you an annual income to manage feral animals, weed control, any fire risks, etc. Now, the cool thing about that was, you know, standing here today, that's cleared land. It has no biodiversity value. But the BCT getting you to get into carbon value unlocks biodiversity value in 25 years and potentially gives you future income and your children future income in perpetuity to support that box gum grassy woodlands. So, and I was aware of it. I think it's a fundamentally really good idea, but I don't know enough about the BCT's ambitions with that project to know whether they're going to take it out of that pilot concept and make it more widely available. But I think it's a really good idea.
It was very, very good to work with. It had a lot of glitches in it in terms of working with that from an online perspective to provide the information to the government, because it was a tender system, so that everyone would tender their project and bid for X amount of money that you would need to run your project. So that's how that worked. I've just looked it up on the internet now, and the site was last updated on the 1st of March 2025. So it doesn't look like they've continued it, but certainly I would, from my experience with it, it really had a really good foundation that you could work with.
Awesome. Thank you. And Simon, you've got your hand up.
Yeah, just clarifying. So I think that question there was about the Carbon Plus Biodiversity program run by the federal government.
No,
so there's actually been multiple pilot projects. So there was the federal government one was run as a pilot to try that new method, the environmental plantings pilot method, which had, if it was less than the 200 hectares, then you didn't have to do the auditing process. So that was trialled across regions across New South Wales, and that was a one-off. But coming out of that was the development of that method. There's also been the BCT program, which was a New South Wales program, which you just described, Wardy. That's correct. It was a combination of locking up existing vegetation, which is what the BCT normally does, but also adding a planting area, which after the 25 years could then be added to that conservation agreement. And then the New South Wales government's also done a living carbon pilot in the Riverina area as well, which again was supporting landholders to try to do the projects themselves and produce some case studies out of that. So yeah, there's been multiple things. They've all been pilots. Can't guarantee what's going to happen in the future, but they were more getting people on the ground, testing some new methods out to see what came out of them.
Thanks, Simon. Anybody else in person or online got questions, comments, concerns around open woodland restoration? You might have scored yourself an early mark, kids. All right, thank you, everybody. Thank you to Rowan and James, my colleagues here at Regen Farmers Mutual, for your assistance. Thank you, everyone, for your time. I highly encourage you, if you can, to come to the field day on the 25th and our final of these co-designs, saying how do we tell our story? How do we communicate the productivity benefits? We'll be doing something similar where we bring up the calculator and we're seeking your feedback. How should we best communicate the productivity potential, whether that's improvement or impairment, the changes in valuation over time, the reduced mortality of lambs thanks to trees, the increased nutritional benefit thanks to biodiverse pastures. So next time, please join us 28th or the 25th of May. Thank you very much.
Right, then that kind of concludes what we have to line up for today. Thank you so much for your input, especially the producers who are calling. Some